Perfect. I believe you can hear me and you can see my screen. If you don't, please feel free to just chat or put on the Q&A. I'll make sure that you all can see. So I'll start. And thanks for joining us. We wanted to focus on our European, Middle East, and Africa database. For the people who know SPI, we've started 3 years focusing in the US. We expanded to Canada, and last month we made public our European data, where we had good coverage of the whole structured products market. This presentation itself will focus on investment products only. So we'll put aside the leverage, although we have that data. The investment products are slightly more interesting for this audience. And of course, if you have questions about the data, feel free to put it on the Q&A and chat, or reach out to me or anyone within the WSD group about our data. So first, I think the first thing I want to tell you is that the EMEA market grew by 32%, okay, to a total of over 254 billion euros sold in this region. Now that comes from 175 billion in 2022, where mostly this growth has to do with two big asset classes. One is the auto calls. 2022 was a difficult year for auto calls, so you didn't have that many products expiring early, so that was less volume to being rolled over into new products, which the opposite happened in 2023. And of course is the fixed income rates. Because of the interest rate environment, there was a massive growth on interest rate products with floors, caps, floaters, callable notes, which I'll talk in a few seconds. And then on the right, you can see the growth by country. Again, Switzerland is the biggest structured products market, which in Europe, of course, followed by France, with over 50 billion euros. Germany, with more than 40 billion euros issued, followed by Italy. You'll have here a disclaimer on our source. So this includes retail, non-retail, by sales volume, not by issued volume, and products are shown by trade jurisdiction. When we do not know where the clients that are buying the product are, we've put on our Euro MTF database, which you can see there. But then, of course, besides that, we have the UK market, which was good market. You have Luxembourg, which has a lot of products that we do not know where the actual client is. And of course, you have Spain and Portugal also been growing, as well as Belgium. Anyway, let's go through the details, because what I wanted to focus, again, it's more on the trends and what we think is going to happen in this year. So drivers of this market I already mentioned, but I want to give you here a few numbers, which we'll go into detail. First one is interest rate products. It grew 77% year on year, so from 2022 to 2023, with more than 35 billion euros sold. In floaters, again, we're not including here just fixed coupon notes and deposits, but this is just what we would consider lightly structured. Then the second point is credit. Again, this 3 billion euros, it's mostly retail, where you get information. So of course, CLNs are much bigger if you count institutional, but year on year we see a growth of 200%. So it more than doubled the compared with 2022. And inflation, an interesting trend with 400% increase. Again, high interest rates, inflation coming down. There was a good opportunity to get good participations on inflation, which I'll show you later on. Now, interest rate products, and this is where I want to show you. So it grew considerably, from less than 4,000 products to more than 6,000 products. You can see on the left chart, the volume placed as well as number of products. So considerable growth. Okay, where does this growth comes? Of course, Germany, one of the biggest markets, but massive growth in France. And I'll show later on, but France has been the market that interest rate products saved the year. Although other calls didn't have a bad year, it was the interest rate products that made the French issuers had a good 2023. Then on credit, I wanted to show you here some data on why this trend, and you can see from 2022 to 2024, the S&P 500 investment grade corporate bond index, you can see the yields on those 500 names going up from just below 2% to 5 to 6% average, and that of course on the big blue chips stocks in the US. What we also see, there's a displacement into some sectors, right? And if you look at what happened after the banking crisis in the US last year, with a higher interest rates environment, made it more difficult for companies to raise capital. So there's been here a shift, and especially looking at CLN's yields using the bonds that are in the market, which their prices are well below par, and you were able to get a very good pickup yield. So the average annualized coupon in 2023 on CLNs in Europe has been above 7%. And I put there the top 10 reference entities. I mean, there is no specific order. Apologies for that. But you can see, of course, the iTraxx market, the most popular CDS indices, CDS tranche indices. But some of the financial names like SocGen, Commerzbank, Deutsche Bank, of course, the German government, NL, Austria. So very safe, very considered very safe names within the CLN, but being able to pick up a good yield compared with previous years. And I think this is something we'll see throughout 2024. Now, in terms of product types and subtypes, 2023 was the year of the capital protected. And here, what we do is, of course, we look at the capital protected interest rate products, which we'll show you a few more details on the type of trends. But you will also see on the right corner the subtypes. You have the fixed income rates, where we put all the interest rate products, and we'll have another subcategory, which I'll show you later. It's Barry Phoenix, Barry reverse convertible. So the most popular product subtypes within autocalls grown considerably, especially between Q1 2023 and Q4 2023. And the reason, of course, has to do with the rollover speed. Number of products expiring beginning of the year last year, where equity markets performed very well. It decreased rapidly. It started to come down, and then later on in Q4, we saw, an increase, especially as equity markets performed very well. Now, in terms of underlying asset class, and again, I'll say this is all EMEA data that we have. Fixed income rates, of course, now the biggest underlying, followed by the Eurostoxx 50, 6%, followed then by the Eurostoxx Bank, S&P, Euribor 3 months, and you can also see credit being on the top 10 underlyings. So the other thing which I think it's very relevant to say is that if equity indices were very popular, we've seen an increase on equity shares, baskets of shares being used during 2023. Very popular, especially, and I'll show you more about technology, some healthcare baskets, which I'll show you in a couple of minutes. I can see we already have a Q&A. Feel free to ask questions, and I'll go through the questions later on. Now, what I did, I selected a couple of the biggest European markets to give you some trends within those markets, which Some of them are are the same in all regions, in all countries. Okay, other ones are more specific. But for example, in the Swiss market, which of course it's a big market for reverse convertibles on single stocks, share baskets, which there was a big growth. We wanted to show you here where we see biggest growth, and there is three, of course, big sectors where there's been a strong growth. One is the healthcare sector, materials, and of course technology, especially with the Magnificent Seven in the US, okay, which had an amazing 2033, and we could see that people were looking at these underlyings where one had good dividend yields, two had a lot of volatility, and were able to pick up income, pick up a bit more coupons compared with with the equity indices where volatility has been low throughout the years. Then, of course, the French market, fixed income products saved the year. Okay, what you see there on the left is the growth of fixed income trades. Crédit Agricole is, historically has been, one of the leaders in the interest rate products. Helped this growth, and you can see even more other ones like SocGen, BNP, and everyone else selling more of the fixed income products. One notice which I'll say, it's the callable notes growing the most. So on the right corner, you see the split by the type of payoff within the interest rate products. You can see fixed coupons are the ones which grow the most. And that has to do with they are there because they have a callable feature, which one could consider it as an option. Okay, see big growth, and then of course the fixed to spread. So as the yield curve is inverted, people looking at it as a way to get higher coupons in the next couple of years, and then variable later on in those notes. Then the German market, of course, there is also a growth on the interest rate products. We wanted to show you different trends. So here we select the growth of auto calls in the German market. So on the left, you can see the market share of the calls that grew from 18% to 21% in 2023. And of course, you can see there the volume. Interesting trends which we see is that it's less auto calls on your Stocks 50 and the DAX, and more custom-made and thematic indices. So I've showed there, for example, the Solactive Decrement Index that was then existing in 2022 and got really good volume from some of the German issuers, almost 6%. And you can see a drop from the Stocks 50. Then CLNs, I've just selected Italian market, also a considerable growth, more on the auto calls and the fixed income products, but I've also wanted to show you the trend of the CLNs. So in the Italian market, it tripled the total volume placed for more than 1 billion euros, which is considerable as it's mostly a retail market. What I wanted to show you there on the right is the reference entities. So you can see here, I've shown you the market, the tranche indices, but what we've seen also a lot is a trend on single names, especially German, Italian names, very popular. You can see Volkswagen being the most popular, followed by some Italian stocks, some French stocks. Again, also very sectorial based, healthcare, financials. A lot of people picking up a good yield on CLNs. And then the UK market. Again, I think this is interesting. It's a big growth of the IFA market, especially within the auto calls. I mean, structured deposits have been always a good market, but if the growth has not been that great. what has been the growth is auto calls. You can see there the Barry Phoenix, the Barry Digital being the most popular. And what we see is that due to the increase on rollover speed, so number of auto calls expiring and being rolled over into new products, the IFA market and the private banking market in the UK, so a big increase on demand. Okay, then last but not least, the Spanish market also considerable growth. Again, the South European has always been a big market for structured deposits, capital protected mostly. In Spain, the contratos financieros, which are deposits, usually most of it are dual products. So the client invests 100% of the capital, usually 90% goes to a fixed deposit for 1 year, more or less. Then the remaining 10% or 30% gets allocated into the structured product itself, sometimes capital protected, sometimes not capital protected. And what you see is that these deposits had a lot of interest, especially because they were offering very good fixed rates, but as well as some interesting yields on the more structured part of the products. And it grew from 42% to almost 60% of total volume sold. And on the right, you can see they sold last year 8.5 billion euros. Euro Stoxx 50 being the most popular, but you can see there are some baskets like BVA, ITX, Telefonica baskets on the structured deposits. I mean, we've saw, for example, one single deposit getting 650 million euros in one single deposit on a basket of shares. Actually, these free shares, it's two products, but one sold 650 million euros. So quite representative. You can see there's some selective indices being done, and of course some shares deposits being very popular, and showing a big growth. Now, for last, and before I go to questions, we're already seeing a lot of data, January and February data, and the market seems to be increasing quite rapidly, which we'll share to our subscribers next week with analysis on the European markets. But I wanted to give you our top 5 predictions for Europe. I think compared with what we all thought at the end of last year, there is a surprise ton of events. The central banks are delaying, decreasing interest rates. We think that's still going to happen at least on the second half of the year. Okay, and that delay made the yield curve keeping at the levels that they are still high. So we still think that interest rate products will continue high, and we can see. We look at Europe in January, there was a growth of 42% compared with the same January of last year, okay, in terms of number of products. And because most of that growth came from the interest rate products, a lot of volume going to be placed into that. Then also an upward trend is the document indices. It's very interesting that the equity indices like the Euro Stoxx 50, the S&P 500, volatility is down, partially due to a lot of the hedging happening on structured products, which keeping the long-term volatility low for the equity indices. So we see a lot of plays on not only dividends, but on dividends with decrement indices. And if last year you didn't need it, because rates were higher, rates are slightly lower, and I think we see an upward trend on the usage of decrement indices. Then third is the auto calls. I mean, we saw January, February is slightly lower, but we can also see big jump on March, products expiring, expected to expire as markets are still up. So I think we will see a big volume on auto calls this year. Then another interesting trend, Much smaller is the commodities and FX. We will believe it will continue to grow. Again, they are small, but as volatility continues to be subdued in equity indices, there seems to be a growth of interest on more volatile asset classes like commodities and FX, and we can see an increase. Last but not least is US underlyings. We're seeing more US stocks being used. Again, US elections this year, and historically, US election years has always been good for US equities. So I think it's giving at the beginning of the year an impulse on US underlyings. Of course, you have the Magnificent Seven, right? But a lot of people think that those might not continue, like Nvidia, Apple, and other ones. So if we see a big increase on trades requested on the brokerage as well, private banking, on US underlyings. Slightly less popular stocks, but definitely increasing. So so this is our presentation. I will go to questions, so feel free to add, but I think we already have a couple. Okay, what's plain on product side? So plain, it's trackers, so one-to-one products. Okay. EMEA label by location of the issuer. EMEA is the trade jurisdiction where the product is sold. Okay, not the issuer, but mostly the distributor. Okay, just so you understand a bit of our data. Part of the group we have Reg Exchange, which is the regulatory data hub for most of the issuers, where you can see the target market, the kids, and so on. So we know. Because to be able to have the kid, you need to have the kid available for that specific country and in the country language. So that's the information we use, knowing where the product is sold. Again, interesting enough, if I look where the location of the issuer, I would say that 60% of all volume is from Netherlands, because a lot of the issuers are actually registered in Netherlands. Anyway, just a fun fact, as most of the money seems to go there. Did he show UK breakdown? Okay, let me go back. A request to show the UK market. Again, this is our estimate. We believe the UK market is around 11 billion pounds a year. Okay, in this particular case, it's only the auto calls. Okay, so the total UK market we estimate is 11 billion, 3 billion IFA. The rest is mostly private banks located with office here in the UK. I mean, we're talking about Barclays Wealth, HSBC, Citi, although they closed the business, Goldman Sachs, etc. And of course, you have some brokerage business that buys the products from the UK. Sometimes they are then sold into EU clients, but we consider them UK if the issuer provided the UK kit, it's a UK equivalent to the kit. Okay, so can you go back to equity slide? Equity slide, I would imagine it is this one for the whole European. Again, I'm happy to share the presentation to everyone who attended. I think you want the Swiss market. Again, this is only the Swiss market. And again, you can see that broad market. So market cap indices are the most popular, followed by financials, and then consumer. This is something it's across all countries in Europe. Again, with different market shares, but those are the most popular equities. Perfect. I'll just give 1 more minute for everyone else to add any question. While we wait, we have 1 more question. So so actually we have 2 more questions. So decrement indices. So 2023 it was just below 17% total volume sold across Europe. It came down from 21% in 2022, but I think it has to do with, as interest rates were high during 2023, there was less need to use document indices, and of course the growth of interest rate products, right? It made document indices market share decrease. Now, in terms of our coverage, again, this is our estimate. We believe we're covering 65% of the total market. So you can see 254 billion euros of sales volume. We have good coverage of the private banking, brokerage business happening in Europe, as well as the retail, less on institutional. Then again, it's very difficult to get all the institutional notes sold, as you know, but we have a very good coverage, especially from the Anglo-Saxonic banks, some of the French banks like SocGen and BNP, and of course, again, Reg Exchange is our biggest source, followed by everything that is listed on exchanges. So in Luxembourg, German exchanges, Italian exchange, the London Stock Exchange, all the Euronext exchanges, and so on. Okay, we have one last question. Can you explain the impact of issuers opting out of sharing their data on these statistics? Yeah, similar. It's 65% of coverage. Of course, there's always an estimate. I can tell you we have very good coverage of all the Anglo-Saxonic, all the German banks, even Swiss banks, what is listed, and retail market. Where we have slightly less coverage is some of the French banks, especially Crédit Agricole, Natixis, who have less data available. But again, happy to share some information if you reach out to us. Happy to give you a demo on our data. Perfect. Look, thank you very much, everyone, for attending. I hope this was interesting to all of you. We'll share the presentation, whoever participated, okay, in this webinar. Yeah, feel free to reach out if you have any questions.